Tulisema all traders wenye wanaangalianga options alafu wanaenda wanatumia the same information kutrade kwa spot market, wawezi compare na normal traders au wako mbele kama now. Nataka tuangalie leo kitu different inaitwa heatmaps. Actually hii sasa ni mwecheche kuliko ile nyingine yenye tulikuwa tumeangalia, because sababu on the first video tuliangalianga hapa kwa chart, ndio tukaangalianga these things here that you see here. So tuliangalianga hii options, tukaangalia underlying price, nikakwambia hizi ni nini put and all these areas zenye unapaswa kuconcentrate on. Leo nataka tu jump all the way hapa kwa heatmap. Nataka tuangalie kwa open interest enye iko kwa open hapa. So hii sasa, this is actually even more good than the previous one. Now, I want to explain a few things here because I have only 10 minutes to explain to you all things that I am supposed to tell you and how to interpret all these data. All right. Number one, this is of course gold. So when you see this symbol here in GC, of course is a gold. You're going to see it on either options and also on futures. GC, that is absolutely gold. Hapa kwingine hapa tuko na kitu inaitwa DTE, because of course that means that is date to expiry. So when you see 2, it means it's 2 days to the expiry. This is 6 days to expiry, because of course is in the options and futures was in expire. So 26 days, 59 days to expiry. Now what does that mean? Of course that contract is ikianza hiyo contract umebuy expire, kama ulikuwa umebuy kama contract, of course haikufika that level, of course you normally lose money ama you gain money when the contract moves to that place. No, what normally happens to the contract is that, for example, tuseme for example hii contract ya 26 days, for example unaona kama ya 26 days around 4600, kuna contract mingi sana za calls na put around expiring itakuwa around the 26 zenye zimekuwa remaining here. And what that means, if the price has not really touched here, because you can see so many people actually betting that the price is actually been going to 46, what normally happens is that the price normally tries to achieve that, like kama commit deadline. Of course wale watu ofisi mnajua kitu initangwa to trying to meet the deadline. So most of the time prices zinajaribu sana kufika at that level, especially at where we have high contract, kwa sababu of course watu wana predict that this is where the market is actually going to move. So that normally acts as the magnet, and normally price tries to move on that levels so very much. Now E is very important because of course inakopea two things at just the same time. This is different from the chart. Hii iko na strike, which is the price, inakopea price where we have high contract, because ukikumbuka kwa chart we only got the price and the strike, but this one is actually more good because now we are getting even the price plus the expiry, which is actually very important, so that we can get expiry. Kuna zingine ziko huko mbali sana, of course, and we don't need that so much. Now for example, the most important thing yenye unapaswa kuangalia hapa ni the first one, second one and the third one. Why? Because most of us are intraday traders. Kuna wengine wana open position, maybe wana close at towards the end of the day. Kuna day traders. So these are the positions that you need to be checking. Unless maybe you are into holding the position maybe for a month or 2 months, or then that is the time you're going to concentrate on 88 to 150 days. Now what do you check here? You're actually going to check, of course kuna vitu zingine unapaswa kujua hapa. Kuna C, kuna P, kuna C, kuna P. You see repeating, these are calls and put, and of course unaangalia 2 days to expiry, of course inafunguka Monday, of course this is calls, almost the buy's position, and this is put. Hiyo ni of course betting the market is going down. Now what are these? These are numbers, and by the way unafikiria hizi loss size, these are not loss size, these are actually contract, and I want us to do a simple calculation here so that you get to understand what does this mean. For example, hapa kwa 46 kuna 133 contracts, which are 133 contract as that price. So one contract is equal to how many ounces of gold? Is equal to 100. So how many ounces of gold is that? That is 13,300. How much amount of money in dollars that is exposed to that position? Multiplying by 4,600. So you get the $61 million that is actually exposed to that area. Ukimultiply my friend na Kenya shillings around 130, unapata ni around 1, 2, 3. This is at 7.9 billion. Yeah, this is 7.9 billion that is actually exposed here alone, here alone. So that is very serious thing that you see here. Those are bigger positions that we are talking about here. So you need to check, number one, the most important zone. It will give you where you have many contracts that are actually appearing on different, that are high on different expiries. For example, ukiangalia 4600, of course unaangalia unaona iko na mini contract, especially kwa different all the way out. Actually iko na mini contract throughout, compared na hizi zingine ziko na 1 2 3. So those are not important areas. So 4600 as we speak right now, gold in a trend around 4540. So there's likely market is going to move to 4600, around that area, and of course the market is going to be attracted to that area. Another very important zone here, ona venye iko na mini contract as same areas, and of course 4700. So those are the areas that you should mark on your calendar, because of course market is going to visit those areas so many times. Now that is things that you really need to draw, because ukiingia kwa trending view you're just going to get the same thing. Allow me to also open the trending view so that you can see. I need to finish this very quickly. Now let's go to what is known as OE change, right? So hapa kwa OE change is now different thing, kwa sababu hapa inatuonyesha the number of contracts that are handing or reducing. For those you now standing the DOM, kuna vitu inakuanga almost the same. Of course inatuonyeshanga DOM inaweza kuonyesha, you can set it kuonyesha how the position are reducing at a position or if they are handing. For example, tukiangalia hapa kwa 4600, we can see the position are still handing up. These positions are still handing, contracts are still handing, and that means people are trusting this area here. But ukiangalia hapa kwa 45, positions are reducing. Hapa kwa 4550, of course kuna position that still increasing. So these areas matters a lot, and that is what we need to check. But of course pia angalia 47 position are still handing up. So those are the most important thing that you really need to check. But kama ulikuwa umefocus hapa kwa 46, maybe on Monday 46.25, maybe market is actually going to boom and always maybe move up because of contract are really reducing here. So this is what you need to understand, because this is very important. Now ukiangalia on Monday, this is a position that we're talking about, that the market achieved on Monday around this area here, which is almost 45.95. So around 46, around this area here, make sure that you observe that area carefully, because there's probability market is going to test that one. And what you need to know about this is, number one, it does not tell you directly whether to buy or sell, but what it means is, for example, for OE here, it tells you that if the market is down, for example, market iko chini, when it comes to 46, there is high probability there is going to be a resistance, there is going to be a rejection at that area. And if the price is really going to keep moving up just like that, because those are probability for rejections. But in case the market comes to that level and the price start moving up, of course it's going to be a fuel that is actually going to be happening at those areas. But there's one thing that you need to understand from this area here. If you really compare, for example, up to 50 here, you see we have these calls and put around 26 of the expiry here. So you can see that we have so many calls here and less put. So there's a high probability. If you look at the difference here, when you actually look at difference here, you're going to see that we have more calls here than put. Of course, this high likelihood the market, when it comes to that level, is going to continue moving up, right? Follow me on YouTube at Aurex to learn more of this. This is very incredible. All right, let me just know what you need to know next.